YouTube Live. You gotta get those two people to join us on YouTube Live. Here we go. Just queuing up here. Hold on a second, folks. Hold on. YouTube Live.
Okay, sounds good to
You gotta get
me.
those
We
two people
are working on that.
to join us on. There we go. All right, that one works. So we got all set to go there. All right. I just waiting to see all these people still joining us here, ladies and gentlemen. Let's wait until everybody comes online. We will wait. We will wait. We will wait forever for you. Well, that's enough. Okay. There is a questions box. Okay. Okay. Now what we got to do is hit the record button and we're all set to go. All systems go. All right. It is now official. We are starting our DayTradeSPY.com week in review. My name is Hugh. And there's my beautiful dog Lucy. May she rest in peace. I lost her several months ago, and yeah, I've been sad ever since. And I see that the background here is casting a shadow on my face. So I'm going to just close the blinds here. Close the blinds. And in a second, I have to turn turn the light on, and maybe this will work. Okay, yeah, we're all good to go. That's better. Oh, my hair is such a mess. I took a little nap there earlier. Okay. How's this? A little bit better? Not really, huh? Oh, good evening, St. Louis. Good evening, Chicago. Good evening, New York. Good evening, Florida. The Keys in Florida. Good evening, Texas. Look at all these people chiming in from all over the place. Good evening from the West Coast. Good evening. All right. All right. Good evening, everybody. Everybody. There's a questions box. Please use that. You'll find the icon on your Zoom dashboard. Click on that. I'm the only one that sees that. Let me just pull down some of these other blinds. I think we're still getting a bit of a bit of a thing here in the back, aren't we? There. How's this a little bit better? And I think if I bring these down a little more, then I'll probably wipe out any ambient light. Maybe a little bit better. Okay. All right. Well, it's a little bit better anyway. So, all right, gang. Let's get started. Okay, there's your standard disclaimer. I'm going to give you a few seconds to read that over. Maryland, Santa Barbara, good evening. Good evening, Toronto. Good evening, Rochester, New York. Good evening, Orlando. Good evening, Charleston. All right, you alone are responsible for all your own trading, and past performance does not guarantee future results. All right, and all that said, good trading, folks. So what we're going to do here this evening is I got to move these guys over here. Seems to be there's a lot of stuff going on in the middle here. I've got two screens, so sometimes it's a little bit tough to move things around here. All right, here's what we're going to talk about tonight. We're going to talk about last week, going to take a little bit of a poll, and then we're going to talk about the upcoming week, give you a little bit of a 2-minute tutorial, your next steps to success, a Q&A session, and we're going to have a little contest. That's what we're going to do. I don't know why this background and my colors just seem to be kind of fading into each other, aren't they? But anyway, it is what it is. It'll get better as the night goes on because what's going to happen, the sun is going to set and it won't be quite as bright. So, anyhow, that's what we're doing here tonight, folks. Who am I? Why should you listen to me? How many people here are for the first time? Let me know in the questions box if you're here for the first time. Not much sense in me going over all of this data information here if you're already familiar with who we are. I spent my early days in training in the trenches. Learned everything the hard way, and now I'm telling you what I learned the hard way. Discovered some pretty cool strategies that, generally speaking, work for me. Others noticed. They coerced me to teach them. That's what we do. You get the real deal here, folks. Good, bad, and ugly. I'm going to give it to you. All right. I'm going to tell you what it's like, what it was like this last week. It was. I'll tell you in a little bit here. We'll talk about that in a bit. But I look for short-term breakout trades. All right. I'm not looking to stay in the trade very long because, quite honestly, especially these days, very difficult to discern where the market's going to go, even, even though we're pretty good at it. But it's been a struggle last a while. But anyway, we'll get into that a little bit. So that's what we do. All right, let's move on to this one here. Get that over there. Just a reminder, Spy on the Market, if you don't have this newsletter yet, you might want to sign up. Um, I think we're going to be approaching our 100th session. I don't think it's going to be this week. I think it's going to be the next week. Our 100th edition of Spy on the Markets newsletter. I write every week. You're going to get this every Thursday. Brief 3-minute newsletter, very light, relevant, entertaining. All you have to do to subscribe, go to our website, DayTradeSPY.com. Okay. Hmm. DayTradeSPY.com. Funny how that works. That's exactly what we do. It's in our name. We day trade the SPY. And this week's topic is going to be converging indicators. Converging indicators. Okay. So might want to get it on that one. If you don't want to subscribe, but you still want to see the newsletters, just go to our website, DayTradeSPY.com. And up at the top left corner, let me see if I can pull it up here. You can actually go up here and just hit on Spy in the Market newsletters. Click on that, and you'll see them all listed down here. They're all listed down here, and they go way back, and you can pick whatever you want. They're all actually pretty good. You know, the funny thing is, they are very good. The funny thing is, I like this one. Shh, don't tell your spouse. This is a good one. They're all good. These are all real life lessons I learned the hard way. I remember this one here. Don't tell your spouse. Actually, I'm not advocating keeping secrets from your husband or wife. Honesty is always the best policy. Anyway, you got to read this, folks. This is actually pretty interesting. They're all good. They're all good. All right, and just go back and read these. I know people. I know people who print these off and they keep them in a binder and they keep going through and reading them, and reading them, and they get a whole collection of these things. So it's actually pretty good. And of course, there's a little plug at the end here as to what we do, and just join us here and all the various programs that we have. Okay, but they're actually pretty good. Spy on the Market. You want to get it on that one, all right? All right. So this week's topic: converging indicators. Converging indicators. All right. Let's move on to see what happened this week in the market, stock market. I'm going to be right up front with you, folks. It has been a crazy, crazy week, and it is as good as John, my cohort in the trading room, as good as we are in kind of forecasting where the markets are going to go. We had a real challenge this week. In fact, this is probably the worst week we've had in a very long time. In fact, we're even talking how the stock market has probably lost its touch with reality. Consider the evidence here. Over the past couple of weeks, investors have seen strong indications that the U.S. economy is slowing. They've also witnessed President Trump his shocking decision to fire the head of the Bureau of Labor Statistics because he didn't like the economic reports that she was presenting. So, as I understand it, she has like hundreds of people working under her, and they come up with these numbers. And when she reports them, he doesn't like the numbers, he fires her. Is this insanity? But Wall Street keeps motoring along, right? Despite the slowing economy, despite worries over how the White House might try to censor future data releases, because that the way I see it now, I could be wrong, but if I was one of those people releasing data, right, I would be very concerned about my job. Because if the president doesn't like the data that I am reporting, what, he's going to fire me? I mean, it's happened. It's not like it could. It has happened. And but this exuberance in the stock market continues on and on. Um, the bull's latest argument is that an economic slowdown could actually be good news because that could actually prompt the Fed Reserve to cut interest rates. That's where we see good news is bad news is good news. That's kind of been going on for a while, but we're going to see what happens. And next little while is going to be very interesting, of course. But anyway, here's what happened last week, folks. So don't be surprised. I do have some losers this week, all right? On Monday, SPY rose 8 points, snapped a 4-day losing streak, recovered the losses of late last week on hopes of a Fed September rate cut. 8 wins on Monday. 8 wins on Monday. That was good news. On Tuesday, the market rally stalled amid lingering tariff concerns. SPY shed a half point. We had 6 wins, 2 losses and one hold. 6 wins, 2 losses, and one hold. On Wednesday, Apple announced a $100 billion investment in the U.S. Well, that led the tech sector to advance, to push the SPY higher back to yesterday's pre-market levels. We had 4 wins, 1 loss, and 3 holdovers overnight. Getting into Thursday, SPY slipped. Slipped to test the 630 mark after new tariffs kicked in. This was the August 1st tariff, deadline, and included a 50% tariff on India because India is buying Russian oil. Okay. We ended up with 2 wins, 5 losses. What we did there is we simply cut losses. We cut losses because the faith and confidence we had in the market, for whatever reason, on those particular options just wasn't cutting it. So we thought we were going to scale back. Let's reset. All right. It's kind of like a giant reset. So we did suffer a few losses there. Friday, investors were optimistic about a September rate cut as they're talking about that. The Fed members were speaking, they're rather dovish on that. And we also had resilient corporate earnings coming out, closing out the week higher to top 638 in post-market trading. We end up with 6 wins, 3 losses, and one holdover into next week. Not exactly what we wanted, but it is the way it is. So that's the way the week rolled out. Here's a seasonal chart, folks. This is what the seasonals look like. For those of you not familiar, the blue line is where SPY is now, and the red line is the average of the last 5 years daily closing price. And you can see how, historically speaking, SPY actually dropped 4 points from last week. And historically, it rose 8 points coming up the following week. All right, when you look at the seasonalities of it. Not to say that that's going to happen the way it did the last 5 years. But if seasonality is any indication, well, maybe we'll see a move back to the upside here in the next few days. So we'll see what happens. All right. So I think if I was to be in a position now, I'd probably want to be in calls. And I believe that the options we're holding overnight over the weekend are in fact calls. And the last I saw, and I haven't seen the market in the last little bit here, but last I saw, the futures were actually up quite a bit. So now that can change moment to moment, as you know it does. So that doesn't much mean what it is right now. So anyway, we saw equities rebound on strong performance, especially among the tech and consumer discretionary sectors, as the earnings rolled out here pretty good the last couple weeks here. Services sectors representing about 71% of GDP remains in expansion mode. Labor market productivity rose in Q2 and corporate earnings still remain strong. That is driving the growth estimates to 9.7%, up from 3.8% at the end of Q2. Higher tariffs take effect. New tariffs on computer chips, semiconductors were announced, varying widely from 10% to 50%. And as you know, President Trump, with his tariffs, tends to change his mind on tariffs almost on an hourly basis. So, pretty hard sometimes to determine what he's going to do next. But we try to live with the fallout from all that and work with it, right? It's not always easy, but here's what the PMI services readings report here, and we're still in an expansion mode. Anything over 50 is expansion. Under 50, that's that magic line in the sand, is contraction. So we've got two PMI reports here, the S&P Global and the Institute for Supply Management. Let's go back. Oh, there it is right here. So it looks like the S&P Global is a little more bullish here. I think we're at about 56, 57%, whereas the ISM number was starting to drift down, but we're still in expansion mode here overall. We have been for the last little while. We dropped just very briefly here back in the spring, summer, early summer, but we're back up over that. So we're going to see what happens. This is the path that these readings take, and they are still staying in expansion territory. And then here's a chart of proportion of countries by U.S. tariff range. As I mentioned, tariffs are anywhere from 10 to 50%. I think India's at 50%, not really sure. But I guess Trump also announced 200% tariffs on computer chips, though exemptions were more generous than expected. This one does not show any countries at 100%. Maybe the graph is old, not really sure. This is from the whitehouse.gov website. Most countries are in the 10 to 15% range. Basically, what he's saying is he's using these tariffs to bring countries to the bargaining table, right? Trump, he outlines his strategy. There's no surprise here. I mean, this is his MO. He tells you in The Art of the Deal, a book he's written quite some time ago, as to how he does it. He comes on strong, brings everybody to the table, and let's make a deal. He's probably the greatest deal maker ever. So, but as you can see, most countries are in that 10 to 15 range. Some in the 16 to 20. Canada's in the 35% range, although the items in the U.S. Mexico Canada trade deal that actually Trump had ratified in his previous term, those are exempt, which actually includes a lot of stuff. So personally, I don't think that's as bad as sometimes they make it out to be, but then there's some countries in the 40 to 50% range. So hopefully they will all come and make a deal, do whatever needs to be done. So that's the effect of tariffs. And according to Trump, just a few hours after he implemented them on August the 1st, he said, "Oh, we're raking in billions of dollars, billions and billions of dollars." So not sure where he gets the data from, but I thought it was a little bit too premature to report on the data that was coming in. But maybe he's got some access to real-time data as to how much it's. He's probably right. He's probably right. Here's what happened last week. The S&P went up 2.4%. Year to date, 8.6%. Not quite as high as the Nasdaq. Year to date at 11%. I think it's 11.1% actually. Let me just fix this up here. I believe it is 11.1%. Let's get this right here. 11.1%. Okay, there we go. All right. So Dow Jones up 3.8% year to date. That's been bounced around pretty good. Nasdaq is the is mostly the overvalued tech sector, so that's where you're going to see a lot of movement there. Whenever there's movement, you'll see it mostly in the Nasdaq before anywhere else. And that's why I like the S&P. It's just a little more sane. A little more sane. Whenever there's some big moves, you'll see it all on the Nasdaq stocks first, right? The Apples, Microsofts, Teslas, Google's, all that in there. Those are the very, very heavy Nasdaq stocks. And yes, you see some great, amazing growth there, but they're also the first to go whenever something bad happens, right? Something negative comes into the market. All right, folks, let's take a little poll here. I've been reading this craziness going on in the UK. I don't know if you've seen this or not. I'm sure you have. Well, maybe not, but yeah, so they want to bring the voting age down to 16. 16 years. If you're 16, 17, you will now, apparently, according to the reports I'm getting from the UK, you will be able to vote in the next general election. You can vote for your prime minister or whatever. Do you think the voting age should be reduced, increased, or stay the same, or does it even matter? Just reply in the questions box. I'm just really curious to see what you folks think. And while you're doing that, I'm going to just go back and see where some of the comments are. When I said hello to everybody, there's some more. I think I mentioned Santa Barbara, California, Maryland, Seattle, Colorado Springs. All right, Miami, good to see you there. Washington, D.C. Okay, okay. Uh, Question. When I report those 9 wins and 2 losses or 3 wins and 1 loss, that is actually reported in our trading room, in our morning trading room. Okay, that's not all day trading. Those are in our morning trading room reports and in all the trades that we had done in the morning. That is in front of a live trading room. So if you're not in our trading room, you might want to get in there. Now, I got to tell you, not everybody does that. I have a lot of people are doing much, much better than we were on that one. And there's some trades that I just didn't get into because I was trying to decipher what's going on. But we had quite a few reports who actually jumped in right away when they saw the indicators that we were talking about, and they made some pretty good money. So here's the problem a lot of times with what we do in the trading room. See, my associate John and I, because we narrate the events that are going on, it's very difficult to execute our own trades because we don't want to take our focus away from what we're doing and we're talking about narrating the trading room, right? So to execute our own trades, our focus is being diverted away from narration. So we tend not to trade. Or sometimes what happens is I will get into a trade myself, I'll announce it, but then I kind of forget about my own trade and they end up in a loss. That happens. Oh my gosh, I lost. Why did I lose? I was in a profit, but I didn't bother putting the exit in there. I didn't bother I didn't bother to set up my sell price because I was too busy talking. So that's why you'll see some losses. It doesn't mean that everybody lost. In fact, most people in the trading room actually made some pretty good money this week. So all right. So here's a comment here from somebody here. They revised the job report by 1.5 million. Someone needs to be accountable to such an error. It's not just that about Trump does not like the report. That's a fact. Okay, so here's my question about that. We're talking about this thing about how Trump fired the head of the Bureau of Labor Statistics. How about implementing like an audit function or something, instead of just, I don't know how they do it. I honestly can't speak on their behalf, but you would think that, hey, let's beef up the audit function and determine how these numbers are generated. Is there a bias? Are they only asking people in a certain sector or a certain geographic area or something? Let's revise the whole system of how we're reporting, maybe instead of just simply firing people. I don't know. I don't know enough to speak intelligently about that, but if that is the case, then maybe they need to be fired. But it's just the optics of the way that worked out, I think, was a little like, really? But anyway. All right, let's go on. Pitiful week deal maker with Putin, though. Yeah, John H. He's talking about Putin making deals, and here's the other thing: trying to make a deal with Putin. That's almost a futile exercise, isn't it? Just when you think you're getting close and things are going to be a little peaceful, I know Putin then lobs over a bunch of missiles over to Ukraine. It's like, oh, really? And here's a comment here: Putin always has a smirk when he's in the presence of Trump. Trump is also looking like he's suffering from the Stockholm syndrome. All right, so here's the responses to the voting age. Okay, stay the same, stay the same, stay the same. Reduced, really? Okay, stay the same. Most people are saying stay the same. I like this one, increase, stay the same, increase. 16 is too young, stay the same. A lot of them are stay the same. 18 is fine. Michael H says no. No to what? Reduce it? I'm assuming reduce it. All right. Change to only military property owners and or taxpayers. Mark, I love your Mark P. Okay, so I want to expand on that one too. Okay, I'm going to go back to that for a second. Mark P has a really good idea on this one here. Maybe you heard me talking about it before, but I like that idea. Stay the same. 16 is not old enough to know enough about life in general. Bang on, Stephen T. Not sure. From Kentucky. Really? Stay the same. Too many kids today want freebies without working. Bingo, Ken. Bingo, bingo, bingo. Well, stay the same in the UK. I got some people from the UK saying stay the same. Guys in the UK and you guys in the Ukraine, if you have an opportunity to make any input on this increase, no, no, do not lower. No, I remember being 16, so a big no. Increase the age. Voting should be at least 21, Bob J. Yeah, absolutely. At least high school grads only. Okay, stay the same. Wow, everybody's chiming in on this. This is a really good. I hit a real nerve on this one here. Okay. Okay. Right. Increase. I like that. Too young to pay taxes? No to 16. Something yesterday. Okay. So overwhelmingly stay the same. I want to go back to this one here. I kind of like this one here, where change only to military property owners and or taxpayers. I like this. Yeah. So I think we were talking about this the other day in the trading room. So people say, well, if you're old enough to join the military or to have sex or to drive a car, you should be old enough to vote. Well, here's my argument to that. If you're old enough to have sex or drive a car, okay. And by the way, joining the military, I know a lot of countries, like when you're like at a very young age, you join the military for a couple of years or whatever it is. Uh, in part, it's a good disciplinary kind of a thing, but here's the thing: those things, like driving a car, having sex, they're essentially going to only impact basically you and maybe those close to you, right? They're not going to affect. And I'm thinking here, you give a 16-year-old the ability to impact my life and your life and everybody's lives. So here you get these guys, these kids, and I'm generalizing here and I'm going to get chastised for this, but here are these kids, 16, 17, even 18, 19, 20, they're in their mother's basement playing video games. They have a certain idea of what they like. And if they're told, oh, I get all these things for free, why should I pay for it? We get it for free, free, free. Of course they're going to vote that way, right? What would you expect? A 16-year-old's brain is not developed. I don't even think a 20-year-old's brain is fully developed. If I do a Google search, okay, let's do a Google search. Yeah, what age, let me just pull it real quick here. Maybe AI will give this to me. What age is fully developed brain? Probably more like in the 20s, around 25 years old. Here it is. The brain is typically considered fully developed in the mid to late 20s, around 25 years old. Okay, now I'm not saying you have to be fully developed or that you have to have a university graduation ticket to be able to vote, but I think you should. Here's my thoughts on it. And somebody also alluded to this here in one of these comments that you should be paying taxes. Until you're paying taxes, you will not understand what your vote really, really means, right? You should be at a tax. You should be paying some kind of taxes, whether you own property or paying income tax, that kind of thing. Now, if you're in the military, okay, maybe you get a vote there too, because now you understand real life, right? Real life stuff. Like this is real. So that's my opinion. So I think they should raise it to until you are paying tax, you're filing taxes, right? You're in a position where your vote now, and you will understand what it means that when you get a paycheck for $1,000, you only end up with 720. That makes a big difference, doesn't it? So anyway, that's my opinion. But I'm glad to see most people at least say stay the same. Some people are saying increase it, and a lot of people a few people have said to bring it down to 16, but I don't think there's not a lot of people. Only a couple that said that. Uh, Here's another comment here. The sad fact is that most people don't even vote. So here's the thing with that. Yeah, Daniel. It's okay. So most people don't even vote. So here's what happens. You give the kids the right to vote, and they're gonna vote, outvote those people who are eligible to vote, who don't bother to go vote. What do you think we're gonna have here? And perfect. A voter should have skin in the game. Bingo. A voter should have skin in the game. Here's the way I look at it. If you are a shareholder in a company, then you get a vote, right? You get a vote for the director, president, whatever, CEO, right? You might get a vote, right? Yeah. But if I don't own any shares in if I don't own any shares in Meta, I can't vote for Zuckerberg or whoever. I don't have a vote if I don't have any shares in this company. How do I get a chance to vote? So that's the way it should be too, because after all, countries are companies too, right? They're organizations with with presidents, directors, right? They should have skin in the game. Right. Here's the question. Some poor people who don't pay taxes, so they don't vote. I think if you file, so I think you should have skin in the game. I think maybe if you have a college degree, okay, well, there's an interesting thing. So if you are poor, you don't pay taxes. I think you should still file. Okay, so if you file a tax return, then you get a vote, right? Not really sure what to do with that, but I would say that I would rather, if somebody's going to lose, I would say that, okay, so if you are poor and you probably get some sort of social assistance, something that where the system has you in some capacity. Whether you're on social assistance, but you're still filing a tax return, you still need to file. You're old enough. Maybe there should be a minimum age of say 25, and or you're paying taxes. If you're paying taxes at 22, you get a vote. Something along those lines. So, all right. A lot of people are saying yes, a condition of voting to be a taxpayer is a sound condition. I think I kind of like that. Okay, and good comment from Scott too. If you can die fighting for the military, then you should be able to vote. If not in the military, then no vote until age 21 or 22. Some people are saying 22. I like that idea. And having a job or a high school diploma, absolutely. There should be these conditions. I really believe there should be conditions on that. If you have a child, you can vote. That's an interesting comment. Yeah, as long as you have the maturity. A 16, 17-year-old does not, as a general rule, does not have the maturity. They only care about today. Let's face it, that's the way, I don't know about you, that's the way I was. I don't care about tomorrow. I just care about today. Am I having fun today? Uh, yeah. Irving said there are countries in Europe where kids graduate at 16 and 17. Okay. All right. A lot of questions here. Okay, well, okay, just kind of going through some of these here. Okay. If you receive more than 50% from the government, then no vote. Used to be property owners. Yeah. Are you saying all adults are mature? No, Alexander, but I'm thinking here adults should have some more maturity and understand the impact of their vote. Hey, I'm not saying if you don't agree with I'm not saying that we agree on the candidate. I'm just saying you should have a pretty good understanding of what the candidates are stand for, right? Okay, anyway, let's move on. That was an interesting kind of a comment. I'm glad you guys all chimed in on that one here. Nice to see the reaction. And personally, I would be remiss if we let the 16, 17-year-olds vote. I would say, let's all vote for the free lunch. The free lunch. Yeah. Free groceries, free education, free transportation. Oh, wait a second. Isn't that guy in New York? Isn't that scary? Monday, low, no news day, folks. On Tuesday, we have a consumer price index, low, no news day. What kind of a light news week until we get to Thursday. Unemployment claims, PPI coming on. These are some inflationary numbers on Tuesday and Thursday. Then we have retail sales on Friday, along with the Empire State Manufacturing Index. Also, University of Michigan consumer sentiment, and also the University of Michigan inflation expectations. That is coming up on Friday. So that means that our volatility expected to be low on Monday and Wednesday, high on Tuesday, Thursday, and Friday. So hopefully we're going to be making some money, near the end of the week, Tuesday, Thursday, Friday, Wednesday, Monday. It'll be mostly technical trading, right? Based on charts, chart patterns, support resistance, moving averages, Fibonacci, pitchfork, all that wonderful stuff. And of course, this can all change. Can all change if and when President Trump decides to speak, or if anybody makes any major announcements along the way, right? If suddenly there's any major upheaval in the tariffs or whatever, there's going to be some action there. So it's all subject to change. But as of right now, that's kind of the way it is, right? So, all right, I am going to talk to you about the 50K challenge. This is the challenge we started on I want to say the 3rd or the 6th. I can't remember. I think it's January the 6th. We're taking $5,000. We're turning it into $50,000 in 1 year. That is the challenge. We had some drawdowns, and this last week was again rather disastrous. Now, mind you, in some of these cases, had we held on, we'd have done very well. But when we got into this trade this week, there are a couple times when we just simply lost the confidence. We questioned whether we would still stay in this trade, given all things being equal and whatnot. So we ended up taking several losses here. Uh, we had a loss on, I think it was Monday and Tuesday, and was it Friday? Tuesday, Wednesday, and Friday. No trade on Thursday. We had a holdover on Wednesday there. So it was generally a bad week. All right. We ended up losing about what I guess about $4,000 from 43,774 down to 39,656. That's the balance we're at. Although we're not that far from 50K, right? We can make up for that pretty good. A couple of weeks ago, we had a couple of really good days. You made 1,200 and 1,600 there in a couple of days. But we're about 4,000 less than where we were supposed to be, according to this model. But I do expect it to come back up, and we're going to diligently work this up and carefully work it up and continue on up. I talked about hitting the 50K probably by the end of August. I'm still of that opinion. So we'll see what happens. Just got to be careful, just very, very, very careful. So here's another question here, Larry. You are underestimating the youth of today. Yeah, I'm being very general when I say these things. There's some kids that are very astute and know this stuff very well, and I love those and I admire those, and I know some, and I feel bad for them. But maybe there should be an IQ test. I don't know. There should be some sort of testing. It's just that there's too many. I'm thinking here too many. If you want to get the left to vote, then get the kids to vote, right? That's kind of the very general thing, and I'm not sure I'd want my 16-year-olds voting. But anyway, we nailed that one to death. So. All right. Yes, news every day, much unexpected, especially in the administration. And I think that's what happened. Going back to this chart here, there's a lot of unexpected news that had come up sort of midday that moved the markets. And when I found that I was in this trade, all of a sudden something changed. And the reasons to remain in these trades had sort of run out. Then you have to make the determination, well, do I stay this and get into a hope and pray situation, which is not something I kind of want to do. I'd rather have more confidence in the trade than just kind of, drifting along. So I thought just take some hits, cut some losses, and carry on with it. So, all right. So moving along, we've got our 2-minute tutorial. One of the things I don't want to do here is to keep you too much longer than an hour. I say this every week, and then I find myself, keeping it for 9:10, 9:15, and I don't want to burden you with that. This evening's 2-minute tutorial, folks, is going to be using market orders. I get this question every now and then. Why aren't you using market orders? Um, Personally, I like to use limit orders, and I'll tell you why. But here's what a market order is. A market order is where you either sell at the best available bid price or you buy at the best available ask price. Well, the market order generally assures an execution under normal market conditions. There's no guarantee of a specified price. Now that's really kind of important. And with SPY, which is what we trade, the S&P 500 has the most liquidity, the most volume, all that wonderful stuff. You're generally going to get a market order between the bid and the ask as a rule. But I have traded market orders in the past where I got filled, for example, and I forgot what the numbers were, but if I had a market order and the bid is, and I'm trying to sell, the bid is say $3, and um, and I get filled for 285. And I remember calling the broker on. I said, "Well, wait a second. The bid ask is $3 and 305. Why is my order, my seller filling at 285?" And he'll say, "Use the market order, right?" "Oh yeah, yeah." So it should be in between. So, "Oh, not always." If a market order is a negotiated price, it doesn't have to fall between the bid and the ask. And those are momentary, flash prices. On some exchange, if you happen to be on a different exchange or whatever, and there's your order, and the market sees, wants to grab those contracts you have, it'll go down and grab it. Only give you, 285 for it. Well, you're kind of stuck with it, and you are at the mercy of the market. You're at the mercy of somebody else telling you what they are going to give you for your contracts. And conversely, when you're buying them, you have to market as to what they're gonna give them. What they how much they're gonna charge you for them when you go to buy them. So you got to be careful about that. I like to use limit orders because a limit order says give it to me either at the market or the limit, which is the best price for me. And if I want to say I don't want to sell these for less than $3, then I'm going to stick to the $3. If it wants to give me 302, 303, fine, but no less than the limit order when I sell, no less than the limit order when I go to buy it. So when do you use it? Well, first of all, limit market orders are only valid between market hours, 9:30 to 4 o'clock. So I understand it. market orders will not generally work at after hours. Now, SPY does go to 4:15, but pre or post sessions, market orders generally are not going to use. Some advantages, if you want to execute these right away, you're going to get filled. You will get filled, okay? And if you need to exit a position, and if that need to exit outweighs the desire to control the execution price, then go ahead, get the market order. I've done that in the past where, yeah, okay, I got to get rid of these because I am looking to buy something else and I can't buy something else because I got my money tied up in this trade. So to get my money out of it, I'll execute a market order to get the money out of it now. I'm freed up to make a purchase down the road. So here's the risks with market orders. They're fast, and fast markets can also affect the execution price. So you carry that risk of unexpected or unfavorable execution prices. Once you submit it too, it's almost impossible to cancel the order. So let's say you hit that submit button, uh, you're pretty well committed to it. You're just it's gonna happen just like that. It's gonna just snap just like that, right? And it's like finger snap of the camera. Okay. You can't go back. All right. There's no going back. Unlike a limit order, and if your limit hasn't been filled, you can actually cancel the order if your order has not been filled. But the market order, it's there, and it's not necessarily going to be the price that you think you're going to get. Um, Also, some liquidity issues, although this does not really apply to SPY, but I know that with some options that I know some traders have. I remember years ago, people were asking about a certain stock or something, and they couldn't get their fill because the liquidity was so bad. Volume was non-existent or whatever on the options they're buying. So that was an issue. If the volume is low, your execution price is going to be affected as well. That's a risk. And again, you'll probably get filled, but not at the price that you think. So you want to be careful about that. The bottom line here is very simple. Market orders are helpful if your priority is immediate execution and you're willing to accept the risk of an unexpected or unfavorable execution pricing. I don't mean to scare you with that, but if you're with SPY, generally speaking, you're going to be okay with a market order simply because the volume is there. And if you're an at the money option, uh, you're probably going to be okay. But just know that there are some risks involved in that. Anyway, let's move on, folks. If you are looking for market success, we have programs that do work, and we invite you to join our tribe. There's Angie over there. Gotta get a good look at her. She's very enthusiastic about what we do. Okay. She very much supports every week what we do. Invites you to join us. And no, she can't guarantee anything. She will guarantee that she always smiles and has that very cheerful look about her, inviting you to join our tribe. Anyway, all right, let's move on here. What do we have for you, folks? We have our day trade spy signal. By the way, this had its challenges this week too. A couple times it just did not work, and unfortunately, you take the bad with the good, right? Or is it good with the bad, whatever it is. Particular options sent to your cell phone 3 to 5 times a week. It is algo based, and it's an immediate buy. So as soon as you get the signal, buy it, put it up for sale for 5% gain. If not sold by the end of the day, sell it at the market on close. But keep an eye on it. And those people are who understand our programs will generally make even more than 5%. Or sometimes if the volatility isn't quite up to snuff, which you can see on the charts, they might take it 3 or 4%, and that's fine too. Okay. All we're saying is that it's generally speaking, the setup is there to make the trade. All right, the day trade spy signal. The advantage of the signal over, say, the pick of the day is you don't have to be in front of your computer. If you've got the app on your cell phone, you can go about your day doing whatever it is that you do. I know a lot of people are, say, working at a job. They got their cell phones with them. They're not in front of their computer in their office or at home or whatever. And if you get the signal at all, which is generally triggered in the mornings, if you get the signal, you can actually just, you know, stop what you're doing and pull up your app and trigger your trade. Okay, that's the advantage of the signal. It's been very successful. I don't have the data right now. I'm guessing it's probably about 88, 89% successful right now. And even when you sell at the market on close, it's not going to go to zero. It'll be sometimes it'll be a pretty bad loss, but sometimes generally speaking, even when it does happen that way, it's not that bad of a loss because the options that are triggered have plenty of time, so they have a low theta loss. Okay, low theta loss is a rule. But it's been a challenge, but we've been doing pretty good for the most part. And this is one of those programs that you have to do it all the time and keep an eye on your money management. So over the course of a long period of time, you're going to see your account actually really grow with these systems that we provide for you, these programs. Day Trade Spy Signal is one. The pick of the day is another one. These are particular options emailed to you at 9 o'clock in the morning. Now, differing from the Day Trade Spy Signal, which is algo-based program. This is a pick that is determined by John and myself every morning. We get together before the market opens, before 9 o'clock for sure. Hmm. Excuse me, I want to take a drink. And we negotiate what the trade should be, right? We talk about the trade, and we discuss the news that had happened, the news that's coming up. We discussed all the fundamentals. We bring in all these things, the tweets or oh sorry, X. It's X now. It's not Twitter. It's X. X tweets. I'm still going to call it Twitter tweets. We know we get all that news. I get the information from the White House, the emails. I get all that stuff. We get all the news feeds that we look at. And there's a lot of news feeds between John and myself, and there's also a lot of technical indicators that we look at. And we throw all this together, and we come up with a reasonable expectation of the propensity of the trade. Is it going to go up or is it going to go down? All right, that's what we do. So these are actually hand-picked trades to be bought at market open. So when the market opens, if it's going in your direction, let's say the option of the pick is a call, and you see the pressure to the upside, buy it right then and there. Now, having said that, when the opening bell chimes, give it a few seconds for the bid-ask spread to settle in nice and tight, right? You want to get nice and tight. Within 2, 3 cents of each other, preferably. Maybe 4 cents at the tops, but no more than that. Because sometimes, especially when there's a gap, you'll see a very wide bid-ask spread. And always use limit orders. Limit orders, all right? Now, for another tip, let's say the option is a call option, and you see the pressure to the upside right at market open. And let's say the bid ask is say $3 and 305, but you see it pushing up. You might want to try and get it for say 306 or 307. I know it sounds a little sort of counterintuitive, like wait a second, I'm giving you the ask price. Why should I pay more for it, right? Well, the reason is because by the time your order gets to the market, that ask could now be up at 306, 307, 310. So you want to get to the front of the line on that one. So if you want it, you want to buy, you don't want to chase it up, you want to get to the front of the line, grab it, and as the rest of the market is pushing it up, very often you'll get your 6% very quickly within usually a minute or two. And that's how we do it. That's actually how we do it. So immediately, as soon as you buy, put it up for sale for a 6% profit target. What we tell people is okay. So the powers that be with Eagle told us that, well, we have to close out the trade by the end of the day. So the rules say that if you haven't sold it, close it out at the end of the day. All right. Or we also like to say, if it's down 40%, you may want to consider that as well. But most of those trades are able to be held overnight because there's plenty of time in those trades. So a lot of times when we make these picks, we're kind of looking a little longer out so that if you do have to hold overnight, you're probably going to be okay. So consider that. Don't just necessarily dump them just because you could. And I know this last week, I think we had probably two or three of those losing trades. Um, could have been the pick where had we held overnight, we would have actually made the money on them. Because I know I checked them like the next day. I said, "Oh, look at this." We had to close it for loss, but the next day it was the market gapped in our direction. We'd have had a nice little profit. So, but anyway, this is actually another great strategy that we have, the pick of the day. Again, it's ideal for anybody who was unable to watch the markets or be in our trading room. So you might want to get in on this one, the pick of the day. Next up, we have our Inner Circle. This is a program we started back in 2010, ladies and gentlemen, when we first started Day Trade Spy, teaching people publicly, internationally, how to trade options. We started the Inner Circle, and it's been going ever since now in its 16th great year. Every morning, you're going to get a morning market analysis sent to you at 9 o'clock. Actually, John is the one that prepares it. Very comprehensive, although it's brief, but it's very to the point. Tells you what he sees that day. So we do the heavy lifting here, and you get a follow-up report later in the day as to what we actually did. You're also going to be invited to our Wednesday night meetups where you can ask any questions at all about anything at all. Nothing's off the table there. SPY, the stock, the options, chart setups, chart patterns, and the indicators. John gets into some very detailed analysis as to what he's looking at and why he's looking at whatever. It's a great learning opportunity if you're interested in learning what we do. All right. Outstanding way to get started, by the way. It doesn't cost you a whole lot, and if you are already a seasoned trader, it keeps you in the know. All right. You're gonna let us do the heavy lifting in this, and it's also the most affordable service. Every morning you're going to get this report, so you don't have to bother with trying to analyze it all. John has been trading SPY options for a very long time, as I have. Combined, you're getting over 45 years of market experience. That's a lot. So I think we've probably pretty much seen it all. And there's not a lot that can kind of, get by us. We've pretty well seen everything on this in this business. So I think it's a really good value. Also, too, I want to tell you our sort of our prize program here is the trading room, folks. This is where John and I, again, 45 plus years, we give you, so you basically have a mentor in your back pocket with the two of us. This is where strategies come alive every morning, 9:20 to 10:30 Eastern Time. We get together at 9:20 and we determine what the news is, how it's going to affect the markets, what impact it's going to have. And we lay it out there for you right there as to which way we're looking to, probably go. We're going to see what happens. We get our support resistance lines, any chart patterns that might come up. We look at our various indicators that we get them all set up. And we've got our OMG out of the morning gate, bread and butter strategies, different things that we look at, scalping strategies. This is where it comes alive. This is where you can learn and earn. It's also very interactive, so you can actually ask questions. We answer them real time, real market conditions. It's exciting trading. We teach what we trade what we teach, and this is where you're going to get your questions answered. We've been doing this now since 2010. Once again, 16 years. You want to get in on this. Now, all of these slides I have at the bottom to contact customer service at DayTradeSPY. The reason I put that in there is simply because you can go to our website and pick up these pick up the subscriptions there. But a lot of these programs you get a much better deal if you simply contact customer service at DayTradeSpy and say, "Hey, listen, I'm interested in such and such a program or all of them. What's the best price you can do?" And I suspect too, I can't say for sure, but I know that this has happened a lot where I want to take the whole thing. The whole package, everything. I want everything. I want the pick of the day, the signal, inner circle. I want to get the trading room, everything. What's the best deal? And they'll give you a really good deal, right? They'll give you a really good deal. So you want to contact customer service at DayTradeSpy for the best pricing. All right. So do that, and I think joining our tribe is actually a good thing because overall, you're gonna learn, right? You're gonna learn, and you're gonna have some good mentorship, uh, and it's gonna be pretty good. So I just want to mention it. Every time I click away next slide, it's like my picture freezes. And I am so appalled at how it always seems to capture that worst possible pose with my mouth gaping open or twisted or Oh man, I wish I was born with some beauty. No, just kidding about that. But it's funny how the Zoom just captures the worst possible pose. Anyway, all right, let's get to some questions, folks. Let's get to some questions. And by the way, after the questions, we got a little contest here. We are going to get into our usual random access generator. I just have to bring that up, and I think that's going to be very exciting. We have fun with this. We have fun with this. So I'm just gonna bring that up here while I get that. All right, let's get to some questions. Oh, lots of questions here. Well, I think most of them are still talking about some of these things, these situations that we talked about earlier. There's news every day. Much of it is unexpected, especially in this administration. Absolutely. Why losses? Why losses? Okay. Yes, we factor in everything here. We factor in the all-time highs and picking the trades. You know, if anybody ever tells you they never lose, they are lying to you, out and out lying to you. All traders will have losses. Sometimes we lose because we just simply, the market forces have just changed winds, right? We capture the trade winds as best as we can with the information we have. We look at everything, and the market just reacts in a quirky way, and we just don't want to wait it out. Some of these trades we don't even want to repair. We just want to, well, just let's just exit and go on to the next trade. That's why there's some losses. We don't have losses all the time. The last couple of weeks have been pretty brutal, but we suspect that that's going to come to an end real fast. So, all right, and it's a learning experience, right? We always look at see every time we have losses, we go back and see what happened, what went wrong. Did we get greedy? Were we pushing the envelope? Did we get in too soon and we didn't wait for a certain indicator to line up? Did we get out too late? Did we ignore a key indicator that should have kept us out of the trade until it reversed? Did we set our support lines too high? These kinds of things, right? So, could you define algo based? Daniel, I don't have the formula. If I give you the formula, I'd have to kill you, and I don't want to do that. It's a pretty complex formula, by the way. I don't even know really what it is. It's been very much mulled over into a lot of factors go into what makes that. Um, and I'm not really even sure what the larger losses were, calls or puts here, Mark. I think we had lost on both. The thing is, the markets were very crazy like it's just insane this last week. They just seem to be like I mentioned earlier, sort of out of touch with reality. So we didn't really have a good handle on where the market was really trying to go on that one here. Okay. Uh, yeah. Sometimes Rod here says so he'd be in a trade, market would turn against him, and so he bails. But had he stayed, it would have fulfilled. So there's one instance I remember exactly on the OMG trade out of the morning gate. We established the parameters and it actually hit our parameter, but then it reversed and went back. It was actually to the downside on puts, but we had, I think, a number of moves back to the upside where we were challenging the move to the upside, the previous highs. And after a certain amount of time, we decided that we're gonna not do the OMG trade because it just didn't seem to pan out. And it was no sooner than maybe 15, 20 minutes later, the market tanked, and had we got into the OMG trade, it would have actually filled. But that's how unsure the market made us on that particular trade. It just didn't have that momentum that we're hoping for. And that's part of the whole summer trading as well. Summer trading, you're going to get that kind of effect. Um, in a few weeks, that'll all be over, and we are going to be, getting back into when all the traders come back from vacation, and they're gonna, we'll see increased volume and moves back to the upside. So, all right, let me see. That's about it for questions. All right, let's go back here. Oh, wait a second. That's okay. Here, oh my gosh. Okay, here's what I want you to do. I want you all just skip all that. With all the slides are all over the place. Just skip all that. Folks, pick a number between 1 and 100, 1 and 100, and punch it up in the questions box. Okay. The closest to the number gets the ebook, Triumphs and Tragedies. All right, and that's what we're going to do, right? And what I'm going to do is I'm going to bring up the random number generator. This is our DayTradeSPY random number generator. And I want just to right now, okay, where did it go? Hang on a second, I had it right here. My random number generator. Okay, so pick a number between 1 and 10, punch it in the questions box. This is not the number right here. You see 5, that is not the number. All right, so give me the number, and I'm going to give you another few seconds here to punch it up, say another 20 seconds, and then I'm going to close off the contest, and then we're going to hit there's a little thing here where you have to hit, and then we're going to pick the number. This again, this is not the number, and then we're going to okay, so we are now officially closed. All right, now I'm going to hit the button here. I believe this is it here. The number is 13, folks. The number is 13. I hit this button right there, and the number is 13. So the person closest to 13 gets the ebook, Triumphs and Tragedies. Now, let me just go all the way up here. 13. Okay. Rich McC came in at 19. By the way, if you have if you have uh, if we have more than one person picking it, then they both get the ebook, okay? So we've got Rich McC and David G. They came in with it 19. Right. Let me just go down here. 19. Mark P. Mark P at 10. He's the winner so far. Mark P at 10. Okay. Let me just scroll down here. Mark P at 10. He might have even won already. Okay. Did you already win anything, Mark P? Uh, if you already won Triumphs and Tragedies, let me know. Okay, so the winner is Mark P. I think you know who you are. You came in at 10. And let me know if you already have the ebook, Triumphs and Tragedies. And if you do, you can also, your choice, either the Tips, Tricks, and Traps or Triumphs and Tragedies. Okay, he won. Oh my gosh, he won. I can't believe it. He says, have a good week. See you in the trading room. Mark, what do I send you? Oh man, okay. You get Tips, Tricks, and Traps. Gotcha. Okay. All right. Triple T. Yes. Okay, you get that one here. Okay, beautiful. That's really cool. That's awesome. Congratulations on that. So Mark P. Actually, he's in our trading room, and I understand he's a good trader. So congratulations on that, and that's really pretty cool. I like it. All right. So folks, thanks for joining us here. Listen, if you stand by, you're going to get the URL to subscribe to our world famous DayTradeSPY trading room. Please join us. I believe it's like $6.99 for a quarter, something like that. Can't beat that, folks. Been a pleasure.
And trust the process to keep your eyes on the prize. I can tell.